good evening, traders from across the globe, and welcome to the 886th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. Traders, before we get into this video, let me just say that futures trading, as we know, can be extremely risky and cause substantial financial loss if you do not recognize the risks behind trading, and if you do not recognize that futures trading is not suitable for all trading accounts, and if you do not recognize that a stop is your best friend, then get up and run and don't even watch this video. For you traders out there that do understand the risks behind trading, let's go. Let's get right into this. Tonight, Tuesday night for trading on Wednesday. This video is being filmed on Tuesday night for trading Wednesday, June 27th, 2012. We have a red Omni on the board and a lot of things on this board that we're going to discuss. Why is there a red Omni for trading on Wednesday? Traders, before this video last, when I stood in front of this board, I brought to you another video just a couple of days ago and said, it's a very difficult thing to do, traders, but you must follow the leader here. The leader is pointing us lower and lower we will go. Well, here we are just a few days later, and boy, did we go lower. That has worked. So, why are we still selling? We did come down just like we thought we would. Because, traders, there are multiple head and shoulders formations all over the daily charts, lately. Multiple head and shoulders formations. What is that? Here's a small illustration, traders. Let's say the market starts to rally up a little and then stalls and it fills in this area and then it runs up and puts in the head and it comes back down and it fills in the right shoulder, left shoulder, head, right shoulder. You have one head and shoulders. Then suddenly this right shoulder lends itself to a new head that forms as the market drops lower. A new head forms. This is called now the left shoulder, a head, and a right shoulder. So what do you have now? A left shoulder, a head, a right shoulder, one head and shoulders. Next one comes up. This lends itself to this head and shoulders. It becomes the left shoulder, head, right shoulder. Another shoulder drops in, and what you have here is an upright head and shoulders, which turned into an inverted head and shoulders, which then eventually turned into an upright head and shoulders. Multiple head and shoulders almost always produce a down move. Another reason why we're looking at selling the rallies in U.S. indices. There are multiple head and shoulders all over the daily bar charts, and I'll show that to you in tonight's chart segment. A third reason, traders, we've got follow the leader, we've got the head and shoulders all over the place, multiple head and shoulders, meaning that the down move is probably going to come. Reason number three. Remember the seasonal tendency. I've brought you video after video before the summer began and said, traders, don't forget, as May begins, we have a big summer seasonal pullback. May, June, July, right around this quarter, sometimes through August, you have the tendency to have the big summertime pullback or the pullback during this quarter. Three reasons why we are going to continue to sell rallies. And then, of course, the technical analysis is pointing lower still. So, at the onset of trading for Wednesday, we will start off by selling the rallies. Now, you may have recognized, thank you Dodd-Frank Act, thank you Volcker Rule, thank you politicians for not knowing a damn thing about markets and making ridiculous rules and handcuffing our banks. You might have noticed that, yeah, we can start off with a red Omni tomorrow and start going down, but you never know where these days are going to end up anymore. There is no volume in the markets. The middlemen, the big banks, the big prop traders have been handcuffed, taken out of the markets, and we are left with this. The red Omni can turn to a green Omni before the day's over and back to a red Omni, and who knows where we'll settle. The days of calling a direction and staying with that direction all day seem to be fading away. We need the middlemen back in these markets so we can all jump in and out all day without affecting market movement. I hope that they can repeal those acts, but for now, this is the market we have to deal with, and we'll deal with it. What does it mean? It means this. You can start off with the red Omni. It does not mean it will stay a red Omni, but we're starting off selling the rallies. Traders, with no further ado, let me show you some charts. Okay, traders, what is this crazy Oscar guy talking about? Well, here we are. Multiple head and shoulders patterns. Are they forming? We have to drop down to complete this right shoulder, but yes, they are forming. Left shoulder, head, right shoulder, what does it do? It produces a rally. That rally turns out to be the head of the new head and shoulders, so now you have left shoulder, head, right shoulder is filling in. We gave this to you on Saturday in a video, traders, and said, look, there's no bars here at all. This is a completely empty circle, but we expect to drop down Monday and start filling this in during the week. We did drop down Monday. Here we are Tuesday. We're starting to fill this in. As of Tuesday, it's filling in. What does that mean? Well, the market had the inverted head and shoulders, which is bullish, gave us the rally. The rally stopped cold at my OTAPMA average, at the OMNI Trading Academy's proprietary moving average. Stops the market cold. The market dumps, comes into the right shoulder that's forming now. That, my friends, is bearish. So, the last thing it leaves us with is an upright head and shoulders, which would be bearish, and the whole picture of having multiple head and shoulders together is usually bearish. So your NASDAQ failing at the OMNI Trading Academy's average, going down and creating the right shoulder keeps us bearish. Let's continue. Multiple head and shoulders on the S&P as well, as you'd expect. It held the 200 bar moving average, put in the inverted head and shoulders, rallied up. If I had my average on here right now, it cuts right across the top just like it did in NASDAQ. And we fail at the head and come back down and put in a right shoulder. This also is bearish and will likely come down to the blue average, which is the 200 bar moving average. Let's continue. The German DAX traders, it is in a long parallel channel, bearish. It had gotten to the top of the channel just 4 trading sessions ago, started to break down. Now what does it look like? Shoulder, head, shoulder is forming on the right side. That would be another bearish indication. Maybe it wants to come down and hit the bottom of the blue channel. Bearish in Europe as well. Let's continue to look. Here is something interesting. The Euro traders. The euro is pointing lower now. As you can see, it was starting to rally for a while and bouncing off nice support, has broken that support and since has created a parallel channel pointing towards more downside. So your euro is pointing lower, which means it's in tandem with the S&P. The S&P is probably correct for pointing lower. Then you have this. The dollar index traders, multiple head and shoulders forming here as well. It's not an indice. It's not NASDAQ, S&P, or Russell. It's the dollar index. Why are there head and shoulders forming here as well? Even more interesting. This head and shoulders is an upright head and shoulders, which is bearish, and you get the downward move. So you have left shoulder, head, right shoulder, downward move comes. That downward move turns into a head, which now runs up, and another shoulder is building. So now you have left shoulder, head, right shoulder, and this is a bullish inverted head and shoulders. So you have a bullish inverted head and shoulders in dollars, and on the other side of that, of course, we have the bearish head and shoulders left on the E-mini S&P chart. The multiple head and shoulders, you had the bullish one, led into the bearish one. It's filling itself and will likely crack when it's done. Just opposite of the dollar. It makes this scenario look smart. Traders, at the onset of trading on Wednesday, we will be selling the rallies. It doesn't mean that the entire day in the S&P will go down, because lately these days have been like this. But we do expect that we'd start to come down and be able to capitalize on a down move, at least at the first half of trading on Wednesday. Pull your own charts, do your own homework, take a look for yourselves. So traders, you have seen the charts, and there is our technical reason for why we will continue to sell rallies, looking at the red Omni, at least for the first half of trading on Wednesday. We've got a lot of reasons here, traders. Now, we know this. These markets could easily spend Wednesday going higher, so know that a stop is your best friend. Know that although technical analysis is the best roadmap I personally have ever found in my 30 years to pointing me to the direction that the market will go in tomorrow, but it's not always perfect. It's an art, not a science. Have your stops in, make sure they're reasonable, believe in your analysis, and come on down to livewithoscar.com and allow me to help you understand the analysis the way I show it to you in these videos. The chat room is free. Come on down to livewithoscar.com and join my ever-growing community of OMNIacs. They will welcome you. They will be nice to you, I assure you, and I will be there to help you. Traders, remember this. Keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Yeah. Thank you for watching, and don't forget, multiple head and shoulders are everywhere. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.